Hi there, traders. Welcome to Currency Watch. We've had a lot happen since our last update on Tuesday. We've had the presidential election, which was a surprise to many, and it has seen quite a bit of volatility in currency markets and in equity markets throughout the world. Um, and the major outcome of that so far has been dollar strength and an increase in interest rates in the U.S., which has led to a push higher in JPY crosses across the board, and has seen a little bit of unexpected action. And most people before the election would have said if Trump wins, we would see a safe haven play, where we'd see a push higher in the yen, and we would see a mixed reaction depending on the pairs and the dollar. And that hasn't totally played out to the extent that was thought, and that's why you trade what you see, not exactly 100% what you're thinking should happen. But let's go anyways and take a look right now, right here, to start off at the New Zealand USD. This pair has been my nemesis for the last week or so. I have called out two perfect setups. Then I failed to act on either one of them. Last week I was pointing out the breakout that we had early in Asian trading, and then yesterday after we had the rate decision where they decided to lower interest rates from, I believe, 2.0% to 1.75%, and the pair shot up, even though they suggested that they could continue to lower interest rates, thus trying to decrease the value of their currency. That the pair had shot up, and at that point I even suggested that we could see a continued decline. That was an unusual move, and we could see a decline in that pair in the short term, and we definitely have. The pair from about the time I pointed that out, from 73.40, moved all the way down to 71.80 today, and now the question is how and when do I jump into this cross? And I do currently have an order, I believe, at 0.7270 with a stop just below the high from yesterday, which I believe is at 73.07 when I move my stop at 73.15. Yeah, and I'm going to stick with that order. I do like the fact that if we do continue to see talk from the central banks over there, that we could see a continued push of the fact that they could continue to lower interest rate. We could see a continued push lower. My first target would be this ascending trend line, and then a test of this 200-day moving average, where we may see a bounce, but I would expect a continued push lower over the short term. So I'm sticking with the order to go short at 72.70, stop loss 45 pips away at 73.15. Now the USD CAD is another one that's an unusual trade, but let's start off. I don't know why it's not the next trade I have on here. The Euro USD, the other setup that I currently have in action, and as I said on yesterday, and I'm sorry about Tuesday and a little bit yesterday, I was definitely still drastically under the water. Don't know if it was a flu or food poisoning, but I don't know if I've ever been that sick. But let's go ahead and take a look. But it only lasted about 24 hours, so it could be worse. Let's go ahead and take a look at this. This candle is rather dramatic. A high of 113, a low of let's just say 109, and now the pair has pushed down just a little bit today. So what do you do with that candle? I mean, obviously, if you were going to do a stacker trade, you should have over here. We wouldn't do anything until this pair broke above 112, or we wouldn't do anything until this pair broke below this level here convincingly. Today, this would not count as a convincing push lower. But what I was looking at is if we went and we took a look at this at different levels on a 4-hour chart and so forth, you can see that the push is lower and higher. You can see I think I was mostly focusing on this particular bar here, that you can put your stop above that and look for a continued hot push lower. And there are examples throughout time. But why would I have my theory that we're going to see a lower push, even though we see the pound pushing higher today? The reason being is that we could see that the general thesis right now is that we're going to see dollar strength, because interest rates are more likely going to start going up in the U.S. With the starting in December, and that should lead to further dollar strength against the euro. against the euro. But what we're looking at right now is I can see that we definitely have support here at this recent low at 108.50, let's say. So to to lower my risk, I was looking for a pullback to about the 109.90 level, because that was just the past level of support. And what I ended up was just 110, and just putting a top 50 fibs above, looking for a continued push lower. And this could work out perfectly, because as you can see here, any push up, that would be a significant rebound, what I'd actually 100% like to see. I'd like to see a push down to this 105, 108.50 level. Then I push back up into my entry, then looking for a continued push lower. And we'll have to see how that plays out in the card. But from a fundamental picture, I was definitely still favoring a push lower in that pair. Now let's take a look at the USD CAD. Now this pair, that top ascending trend line that I had been speaking about for it seems like the last 2 weeks, that no longer is valid. This thing is just jumping all over the place up here, but it has managed to stay basically around, stay in this range. And yesterday we had a large bar with the top being around 135.25, let's say, and the low being around 132.64. How I'm going to play this is just like a stacker trade now, looking for a break above or below. If we get a break above, I'm going to go long. If we get a break below, we're going to go short. That's as simple as it is. We get a break right now. If we still continue to see dollar strength, we should see the pair break higher. But if we see dollar strength, that'll equal lower oil prices. So it's always confusing with this cross. So I'm going to let the pair do the talking for me, and just play the ranges. And if you could, I mean, technically, if you wanted to, you could play it is a pretty big range there. It's what, 200 and almost 268 pips. You could play you could just play the inside of the range. Any push up to the top. If we get a false breakout, look for a move back down to the bottom. Any push down to the bottom, and if we break and then push back in, you can play for a look for the. And then I wouldn't say for all the way to the other side of the range, but you could play for a move of 100 pips or so. And that's something I'm definitely gonna keep my eyes open for in that cross. Next pair we're going to look at is the USDJPY. This is an interesting setup, as are most of the yen crosses right now. This pair has broken out of the range. The 105.50 has been on a run, but look where it is. Boom, bam, boom. Right there at the 200-day moving average. That 200-day moving average should cap the price action. This 200-day, let me just get rid of this. That's going to bother me. That 200-day moving average should cap the price action in the short term. And I would not be surprised if we get a push back down towards this 105.50 level before we get a push higher. But this is all going to depend on interest rates coming out of the U.S. Markets, and we are seeing a lot of volatility because there's a lot of uncertainty. There wasn't a great amount of details about exactly what was going to be done from the Trump campaign. So, except that we are going to redo our trade deals. We are going to, it seems as though, maybe become a little bit more isolationist, but who knows? Nobody knows until what actually happens when he takes office in the first 100 days. We'll definitely get a little bit more clarity. But anyways. So what we're going to look at here is if this 200-day moving averages breaks or holds. What I would like to see is a hold of this line, push back towards this 105.50 level, and then a continued push higher, because it still favors a continued push higher with the cross of the 10 and 50-day moving average. 10-day 50 moving average. So once that happens, my bias is at all times to look for the top side as the path of least resistance. If we want here right now, we could take this, just move this line right here to the last high, and you can see that would be the next level of resistance. And if we do break above that, and we break above the 200-day moving average, we would have in fact created a lower low and a new higher high, and we would be breaking the momentum for this slow push down lower. So what I'm going to do right now is I'm going to be favoring the continued push higher. I'm going to put an order in once I finish this to go long right around the 105.50 level. I'll put it on the blog, looking for a continued push higher, and I'll set my stop right below this most recent low, which is at 104.96. Let's take a look at the Great Britain USD. This pair. Defying a little bit of common logic here, but I guess you know what? It's had a lot of damage. It's gone from 150 to 120, and it's very happy to see its English speaking comrades putting a little bit of doubt into their own markets. So we're seeing a little bit of a reprieve from this push down lower, and the pair is trying to break out of its current range. What I'm going to look to do right now is just stay in the stacker setup, and it is interesting that this stacker setup, if we had rode it right through, would have worked to perfection, but you know, it would be a fool's errand to hold a pair through something like the U.S. election. So what we're going to see right now is if we get a break above the 125.60, whatever that 125.60 level, or break below 123.50 level, I'm going to go into the trade in whatever direction we see. Daily close above those levels or above or below those levels, and we'll try to stack into the trade looking for a bit of momentum. And if we get a little bit of momentum and a little bit of excitement in this pound, I wouldn't be surprised if we push even above this 128 to the 130 level. But then again, if we get some concerns over the Brexit workings, even though we heard just what was it last week, that now Parliament's going to have to vote on whether they invoke Article 50, and my theory at that time was that this is their plan is to push this out as long as they possibly can, and the longer you push something out, at similar, I don't know where you guys are or how old you guys are, the O.J. Simpson case, the more doubt you put in people's mind, or just the longer you spread things out, throw little things out there, and then they'll start to doubt it themselves, and then there's a chance that they will change their mind, or they will just become so fed up with the matter that they will just let it go. And I think that's their theory. I don't think it's going to happen, but that's the logic that they have going on over there. Is just the longer they procrastinate, by the government I'm talking about, the longer they procrastinate, the longer they drag their feet, the better off they have of somehow finding a way to get out of leaving the Eurozone, or at least just maybe staying in limbo for eternity. Who knows? The Aussie USD, this pair hasn't been doing anything, just been sitting around. I mean, actually it has been moving around, but it found resistance at the top of this resistance zone between 77.60, 77. Now it's at the 10-day moving average. Would be interested in any move down to this 200-day moving average, looking for an opportunity maybe to go long, looking for a pushback to the top side. But other than that, nothing really shaking, not interested in that cross at the time. Gold. Gold has been in the range between 1308 and 1260 as of late. Drastic move yesterday, down lower after the open, and Dust has been offering pretty strong trade opportunities as of late, just because of the inverse relationship it has with the gold crosses. But all being said, there's nothing really to be said or done here, except you can play the intraday ranges. Let's get back to forex pairs though. The EURUSD I'm willing and waiting to jump into this pair if we can ever break out of this consolidation zone that has been sitting in basically since about the middle of August. We get that breakout, I would think that we could have some momentum to the top side, even through the 200-day moving average up to the 122 level. Great Britain JPY pair has broken out. Pushing higher. I'm going to wait to see if we get across of this cross of the 50 and 10-day moving average before I would jump into that pair. Be much more interested in going into the Great Britain USD cross. So that's it for right now. Have a pending trading New Zealand USD, Euro USD. Interested in the CAD for a breakout. The JPY. Looking for a pullback to the 105.50 level, and Great Britain USD looking for the cross, and EURUSD looking for a break of its current range. All right, everybody. Happy trading. Good luck trading. I'll see you on the feed. Adios.